All right, welcome back to Asset Coach and Tax Strategist. Oh my goodness, I'm so excited. So we've waited a week, in anticipation, and now we're here. Cash flow quadrant, Robert Kiyosaki's cash flow quadrant. So excited to go through this with you guys. Cash flow quadrant, Robert Kiyosaki's cash flow quadrant. And what I say about making your books a textbook, right? So highlights, there's notes, underline. These are textbooks, folks. Books should be knowledge of textbooks. Okay, so great book. So let's dive into this. I'm going to share my screen and I am fired up. All right, so this is where we left off last time. And so let's dive in here to the cash flow quadrant. What is the cash flow quadrant? Now, I'm going to take a little bit of spin on Robert Kiyosaki's cash flow quadrant because there's certain things we do in our planning model and a little bit of additional information. Remember, he wrote this for the public. Okay, so yeah, I'm talking to you as the public, so to speak, but I also am talking to you as a professional expert who understands the implementation and employment of how to use this knowledge of cash flow quadrant. What do we do? All right, so let's talk about this. So let me get my writing tool. I think it'll be better for me to write and give direction that way. So let's look at the E quadrant. E quadrant. So this part of the quadrant is the employee quadrant. Okay, it's where you have a job just over broke. Now, if you're a W-2 employee, that's what this is considered. W-2 is the tax form you receive at the end of the year that shows all the income you earned by exchanging your time into the company that you're working for. In exchange, they give you a financial return on the time. Okay, so there's the two values, your time, their money. Okay, and between the two of you, you agreed that you're going to share these values with each other, whatever your expertise in your job for that particular company is. Okay, now, so just over broke, what's this mean? It means that you're putting time in. Right now, you get benefits, right? You get vacation time, PTO time. You can clock in at 8, clock out at 5. You don't have to think about it. You're not waking up at 3 in the morning wondering what you're going to do with payroll. You're not going to wake up at 3 in the morning wondering if you're going to get paid. Right? Your family has their annual family vacation, right? You get all the normal holidays off. Nothing wrong with that. That's a choice. Like I said before, that's a choice you have made to what you want to do. But because of that, there are certain limitations. Okay. Now, there are limitations in each of these quadrants, by the way, but there also are some benefits in each of these quadrants. All right. There's balance in the universe. Now, about 5% of the wealth is created out of being an employee. How is that? Well, you have CEOs, right? You have the C-suite executives. You have engineers, right? I have a couple when was in financial planning part of things. I had a couple engineers. They worked for the large defense contractor. They when they got started, they showed up as an employee and they say, "You need to save for your retirement. Use the 401k. We'll match. You max it out." And they're like, "Okay." And they did it, and they did it for 20 years, and they saved up $1 million, $2 million, whatever. They made good income. They had other savings and other assets. Awesome. Great job. But it takes discipline. And that was the difference. Discipline. A lot of people in this quadrant are not disciplined, but what they want is they want all the benefits of the B and I quadrant of, hey, I want to be a business owner. I want to be wealthy. I want to have lots of money. Well, you got to make disciplined decisions as an employee to do so. So you're W-2. So you have wages. Your 1040 is going to show wages, and that you're not going to have a whole lot of access to the tax code. Access to the tax code is going to be very, very specific and structured for you. You are in a employee quadrant box. Period. And there's only so much you can do unless you take some of the cash, that's the discipline, some of this cash, and you start putting it into other areas, or you create a side hustle and the side hustle puts it into other area. Okay. That is a plan. That is activity. That is what you can possibly do. And you can do it by also having some tax benefits the more you do of that. Okay. Now, so that's E quadrant. S quadrant, right down here, S quadrant. What is the S quadrant? It's self-employed. Instead of having a job, working for someone, you're working for yourself. Great job, but it's still a job. You own a job now. So now Robert Kiyosaki talks self-employed as people like doctors, CPAs, financial advisors, that kind of stuff, because the B quadrant is more bigger business. You have systems in place. Really, the mindset of the B quadrant is I can go on vacation for 2 weeks and no issues happen. I can go on vacation for 6 weeks, no issues happen. Okay, systems and processes in place. But as self-employed, now there's different types of self-employed. So if you're talking about sole proprietor, where you're on the Schedule C, the Schedule C is on the 1040. So 1040, let's put that up here. Okay, this is your personal tax return. You should know this already. Okay, Schedule C is the business return for self-employed, sole proprietor. So you could be a sole proprietor or a single member LLC on the Schedule. So single member LLC on the Schedule C. Okay. You're taking a step in the right direction. Okay. And there's some possibilities of issues being on the Schedule C. For one, a lot of people on side hustles and Schedule C don't know how to do their taxes. They don't bookkeep. And so unfortunately, there is a higher percentage of audits in this category. Why? Because you're just making enough. You don't know how to do bookkeeping. You're not making enough to hire a bookkeeper, and the taxes you're submitting, you want to lower taxes. That's why you have a side hustle. So you take deductions of things that you probably shouldn't. The IRS knows that. It's not that you're knowingly do it. Some people knowingly are doing that, and some people aren't. But the percentage of audits are very high in this quadrant on the Schedule C, just the way it is. So. But you're still trading your time for dollars because there's only 24 hours in a day. 24 hours in a day, 24 hours in a day. There's only so much you can do. As a doctor, there's only so many patients you can see in a day. Until you hire a nurse practitioner, a physician assistant, or another doctor to duplicate yourself, you're capped out. Period. You're like an island. You can't expand beyond the land. There's just water around you. Okay? You are on a time island. Another good analogy. I love that. You're on a time island. And you want to create more time. You can't. I've prayed to God and said, you know what, God, it'd be pretty cool if we had an 8th day, right? If you gave us an 8th day, then I could work 6 days and still have 2 days off rather than working 6 days and having 1 day off. Hasn't happened yet. So maybe if we pray together, maybe God will listen to us. Numbers, power in numbers, right? Let's go get it. No, that's not going to happen. So what do you need to do? You need to make some decisions. Now, self-employed, you can also set yourself up as an S corp. So that's a small corporation. It is what we call a pass-through. You can, if you have multiple people or even you and your spouse in your side hustle, you can set yourself up as a partnership. Okay. And you can set yourself up as an LLC that's actually taxed as each of these. Okay. And so this is 1120S. This is the tax return for, and this is a 1065. These are separate tax returns for these entity structures. What's that mean, Bob, when you say entity structures? Great question. What you're doing is you're putting a wall between you and your business. Okay. And so you have 2 separate tax returns. But what happens is that all of this flows to what? Your 1040, because it is a pass-through. Okay. So any profit, loss, whatever you do here, results of this and results of the end of the year will go on your 1040. Okay. And if you don't know what the heck I mean and what I'm talking about, awesome. Go check out our Tax Return Academy. Part of membership, Terra Firma membership in our beginning structure is, and all this stuff is in our membership too that I'm sharing with you here. But I have an entire Tax Return Academy course in our membership. Go click on the link. We'll have a link in the description for you. You can check that out. It's $297 a month, and you get access to all this information I'm sharing with you. Okay. In more detail though, and I'm going through tax returns and showing you line items of where to look at and where to be thoughtful of. So anyways, but again, if it's just you, what are you doing? You're trading time for dollars. It's bottom line. So that's what Robert Kiyosaki is talking about with a system in the B quadrant. B quadrant is, hey, I'm a doctor, for example, and I have hired 3 doctors, 2 physician's assistants. So let's do MD. Oops, curl it. Physician assistant. And I have 1 nurse practitioner, and I have a supporting staff of 5. Okay. And what happens is that, what if doctor decides that he wants to go on vacation? He can. Why? Because if he has a system in place, the rest of the system, the team, is running the business. He started planting crops. He's harvesting now. Okay. Now, there's a reason why 95% of the wealth comes from this category. B and I. Okay. There's a reason. So what we want to do is same thing. You have these entities. You still have 1120S. You still have a 1065. You still have access to LLCs, but you have a system in place, an organizational charting of how things work and why they work. So when your cash is flowing, here's the key. Go back to cash. When your cash is flowing, you have a plan to direct your cash. So let me use another analogy. Let's say you're a river. You're a river. And you have banks of the river, right? And the banks of the river are there for what purpose? To direct the water. Now, the water has given guidance of where it's going, and it has created these grooves, and the banks of the river are due to the process of the flow of the river, right? Now, not all rivers are raging rivers, right? Some are just, you just lay there. And you just kind of cruise. You're on an inner tube, and you got your cooler in an inner tube, and you got your buddies and your friends and your wife and your kids, and you're popping drinks, and you're just cruising. And then there's some that are like rapid, they're crazy. Cash flow works the same way. Now, the banks of the river guide and direct where the water goes, where the flow of water goes. That is the IRS tax code. Okay. So imagine your cash flow in the tax code are the banks of the river. Okay. So you're flowing along and you're cruising, you're doing good. Now you can accelerate your cash flow. A river, when does it accelerate? When there's more water. Think about that. When there's more water, it rains and it rushes into there. What happens? That pressure of the water makes the water go faster. That's the same thing with cash flow. Your cash can flow. You have control over that. So more assets you have, the more cash flow, the raging this river goes, this flow of cash. You have the IRS tax code to decide on what you get to do from a tax perspective. It's awesome. So you can have multiple assets. Your raging cash flow can be just cruising. And there's a point in time. Think about it. There's a point in time where there's so much rain and so much water. What happens? The water goes over the banks. What? Same can happen with your cash flow. And now you're overpaying in taxes. Congratulations. So what do you got to do? You got to control your cash flow. You got to understand, how do I organize my assets? How do I understand the cash flow to where I can actually have more access to the tax code, increase the bank size, use more of the tax code to allow my cash to be directed. Doesn't mean that the banks are causing more taxes. It's actually you're using the tax code to create banks, so the cash doesn't flow over it and you're paying too much in taxes. Right? What an awesome analogy. Think about that. That is what the B quadrant does in conjunction with the I quadrant. Now, the I quadrant is the investment quadrant. This is investments. I like the term assets. Okay, we use the word investments because that's what Robert Kiyosaki does, but I like the word assets. He's using the word investments because he's talking to the general public. I'm talking to you. And we're wanting to build assets because they do what? They appreciate and grow and create income. Cash flow. Okay. So can this employee have assets? Yeah. Can the self-employed have assets? Yeah. Can the business owner have assets? Yeah. That's what's great about this quadrant, is that you can use this quadrant actually to create a side hustle. You could use this quadrant to not only create a side hustle, but to create a business, a B quadrant. Well, how do I do that? That's what we do. That's what we show you how to do that, right? It's so hard that's what the 10,000 hours and thousands of books and using these books as tech. Robert Kiyosaki is way smarter than I am. Way smarter than I am. Darren Hardy, way smarter than I am. So great. Why don't I take their knowledge, put it into my head, and then use it? This isn't a new concept. This is not a new concept. And so because of that, what comes out of my head? My own book. Right? So this is what I saw when I read his cash flow quadrant. I saw all this. I was like, oh my goodness, I got to do this. I didn't see the exact aspect of what I tell you. I saw the possibility. I saw the potential. I saw the opportunity. I saw the heck yeah, let's go get it. Let's do it. Did I think it would take 23 years? No, of course not. I was 23, 24, 25 years old. I thought I could do it in a year. No. That's what makes this so valuable. That's what makes this channel so valuable. I'm giving you a cheat code. Just like these guys gave me a cheat code. And we get to cheat the system by ganging up with each other, not against each other, to create what we want in our life. That legacy. So anyways, this is, hopefully you got a lot from this. This is so powerful. Robert Kiyosaki is so blessed to be able to have the opportunity to lay this out, write a book. I mean, this book, let me tell you, this book is, what is it? 200 almost 300 pages, 270 pages, almost 300 pages of information he just gave to us. Well, you got to buy it, but it's just given to us. That's so awesome. And it's been such a huge foundation in my life. So hopefully you got a lot out of this episode. It's so powerful. And here's the thing that I didn't talk about, right? So there's other aspects of designing your business, your B quadrant and your I quadrant, by utilizing S corps, by utilizing partnerships and LLCs. You could also have a C corp, which is taxed on its own. It's an 1120 tax return, okay, and it pays its own taxes. You can actually use trusts. You can have a trust in certain types of trust setup as it has its own tax ID and its own entity structuring as well. These are all things that we use in the industry to help build your assets, protect your assets, grow your wealth, reduce your tax liability. And these are tools that the IRS has given us. These are the banks of the river. It's already there. There are no loopholes. It's just understanding what the government has given us and using it. Now, there's some things where like, if I did that and that and that, could I get a better tax benefit? Yeah. And then what ends up happening is that the IRS eventually goes, okay, time out. You guys are taking advantage of us now. And so we're going to change that little thing because why? Because we're all so much smarter. Capitalism allows us as business owners to have access to each other. And so we're so much smarter together. We outthink the government. And so the government has to catch up to us. We call them loopholes. No, they're not loopholes. It's freaking brilliance. It's capitalism. And then the IRS, the government will catch up. They'll make a change. And guess what? We'll do the same thing. The tax code didn't start off with 70,000 pages. It's not going to stop at 70,000 pages, which is great for us because it's a guidebook. It's a playbook. We get to understand. We get to cheat. They tell us what we can do, but they're not going to show you how to do it. You got to learn how to do it. You got to use other smarter people to figure out how to do that on your own. Sounds fair to me. Stay out of my business. That's what we get mad at when they start getting into our business, right? So why would we get mad if they say you got to do this? Well, that's communism. We don't want them to do that. We got to figure it out. So step up, make a decision, hire some professionals, learn, spend some time, step up. It's your money. Overpay taxes or not, it's up to you. It's your hard-earned dollars, not mine. I'd love to help. There's many people in the industry who love to help. So go ahead and subscribe, comments, thumbs up, thumbs down, thumb sideways, whatever. You know what to do. Thanks so much. God bless.